Please take your seats. Our program will begin now.
Hello, everyone, and welcome to the Bloomberg Sustainable Business Summit. Right now, it's fair to say that companies and investors across the world are facing plenty of uncertainty. But investing isn't just about managing risks, it's about seizing opportunities. And this summit is all about helping our customers seize more of those opportunities in climate finance and sustainability. At Bloomberg, we're using less energy and getting more of it from clean sources. Plus, nearly all our profits go to Bloomberg Philanthropies, which helps fund clean air and clean energy initiatives around the world, including our partnerships with national governments in Asia, Africa, and Latin America. The fact is, fighting climate change, promoting economic growth, and creating good-paying jobs really do go hand in hand. And at Bloomberg, we're committed to being your partners in that work. So thanks again for joining us, and I look forward to hearing about the new work and partnership that grows out of this summit. All the best.
Being woke has been vilified.
The idea of sort of climate and as a priority has really frankly diminished.
The world is preoccupied with Trump's tariffs.
Investors are very much digesting these fresh trade threats from President Trump.
The surging demand for critical minerals is reshaping global dynamics.
AI promising, of course, to transform the global economy, expected to place huge demands on energy.
China is leveraging its early investment into green technologies, not just for economic benefit, but for geopolitical advantage as well.
It may be quiet, and you may have all institutional and business executives not wanting to put their hand up, but they're putting their money into clean energy.
Please Please welcome to the stage Abby Danzig, Senior Editor of Bloomberg Live Experiences.
Good morning, everyone, and welcome to the Bloomberg Sustainable Business Summit. This time last year, we were talking all about the what-ifs of a potential second Trump presidency. And since then, we've seen many of those what-ifs, and some that we didn't see coming, become reality. Today's business landscape is defined by uncertainty, but those of you working in ESG and sustainability are already integrating risk management and resilience mechanisms into your organization's DNA. So you are well versed to be riding these changing tides that we're seeing. And speaking of changing tides, with that comes opportunity. As our opening video alluded to, the absence of leadership in other regions is certainly providing some opportunity here in Asia, whether it's renewables, electrification, or green finance. So we're really excited to be examining all of those various ways that you can stay competitive and also future-proof your business here today. But before we begin, I would like to take a quick moment to acknowledge our sponsors: Summit Advisor Bangkok Bank, presenting sponsor Schneider Electric, supporting sponsor Fraser's Property. And we'd love to hear from all of you today. There's going to be a QR code up behind me. You'll be seeing this throughout the program, and you can scan that to vote in our polls and ask questions to all of our speakers. And with that, let's begin. For a conversation on the leadership view of sustainability, please join me in welcoming Kwee, Group Executive and Group Head of Institutional Banking at DBS, for a conversation with Bloomberg's Eric Schatzker.
Good morning, everybody. Good morning, everyone. Great to see a packed room. As Abby just told you, my name is Eric Schatzker. I'm the editorial director of Bloomberg New Economy. This is Kwee, head of institutional banking at DBS. Kwee, I am fortunate, let's put it that way, to come to Singapore several times a year. Delighted to be back, to see you all. Here's where I'd like to begin. Sure. If we rewind the clock 2 years, just 2 years, few topics felt as urgent as sustainability. Yeah, backlash was beginning to build in the United States, but governments, and perhaps more importantly, companies in advanced economies everywhere, were broadly committed to sustainability. The situation feels different today, doesn't it?
It does.
How would you describe it?
I think I would describe it as one whereby it is an environment largely driven by how the respective governments are looking at this whole space.
Fragmenting then?
Fragmented, because if you look at what is happening in the US, as you know, the focus is really dialing down a lot on renewables. But whereas if you look at Asia, Asia has continued to say that they're committed to a lot of what they said they would do per the Paris Accord. And I just visited India, and also 3 months back. For the last 3 months, I've been traveling through Asia. What impressed me most is a lot of the companies' activities are pretty much aligned with what the government's objectives are. And so in Asia, I'm seeing the government putting in a lot of investments, putting a lot of targets out there, and the industries are aligning themselves, seeing that as an opportunity for them to move towards that drumbeat that has been set by the government.
I'm going to make 3 observations that all of you in the room could make just as easily. Number 1, ESG has become a 4-letter word. We have a US presidential administration with a decidedly pro-fossil fuel agenda. And thirdly, most crucially for both the public and private sectors, in most parts of the world, the priorities have shifted to security, to defense, and of course, to trade. DBS clients do business everywhere, How are they responding to these shifts?
I think again, a lot of them, the focus has been on, many of our clients are Asian clients, and so their exposure to the US has been not as large as their own exposure in this region. And therefore, in this region, when they look at the development that are, again, happening in the region, they're responding by saying, does it make sense for me to invest in a different kind of business? And so therefore, a traditional company, I'll just maybe quote TBS Energy, for example, in Indonesia, is known to be a coal-powered energy company, and how they have seen the opportunity to invest in new renewable businesses. So we just helped them to complete a transaction with Sembcorp Waste. And for them, that is a new area for them to get into. So we're seeing companies responding to different ways of finding new opportunities that are presented by this whole transition. Because we believe that Asia needs to transition into a different energy source, given the extent of growth that we will see and the kind of energy requirement that they have. And so therefore, for them to explore what will be renewable is very helpful for them to look at it from a cost perspective. So it's not just being green for green's sake.
So that raises a question for me. There are at least three factors to weigh in the balance. One is satisfying demand. The second, of course, is cost. And the third, I mentioned it before, but it equally applies to energy, is security. Which of those is the most important?
I think for a lot of them, again, it's driven by what they see as the drive by the government policies. So the government says that it is about security, and then they would align themselves to say, if that is something that is important, and the government is providing the framework for them to do that, then obviously they will just invest along those. And if you look at the supply chain disruption that has been happening, many of them are also saying, does it make sense for me to then look at, from a renewable standpoint, what do I need in terms of a supply chain to make that strategy work? And so they are not just thinking about it from the angle of, oh, I need just green electrons into my operation, but rather thinking about it more strategically that, does it allow me to build resiliency into my operation? And resiliency is just not an operational response to what is happening out there. Resiliency could and will be a strategic advantage that companies will start to look at. And this is one way, or rather just one aspect of resiliency that they're looking at.
Juan, banks were always the biggest and most important members of GFANZ. But as we know, between the US election in November and Donald Trump's inauguration as president, all the biggest US banks, JP Morgan, Bank of America, Citigroup, Wells Fargo, Goldman Sachs, Morgan Stanley, the list goes on, they left the Net Zero Banking Alliance. Japanese banks have left the Net Zero Banking Alliance. Most recently, HSBC left the Net Zero Banking Alliance. Has your industry given up on climate change and net zero?
I think for us, I can't talk about the rest of the banks, but for ourselves, we are staying on course because we believe in a transition, and therefore we want to be the transition bank for Asia. And what that means is we want to be able to mobilize ecosystems and work with both policymakers, the agencies that would like to move this forward for their respective industries that are out there, and as well as the financing that is required for companies who really want to move towards a different kind of energy source. And we feel that that is something that we can play a very big part and a big role in it. So I'll give you an example. So in Singapore, when you look at Keppel Sakra project, so that is a CCGT project, so that's a combined cycle gas turbine project that uses hydrogen. So in the case of Keppel, it's about 30%. And we believe that is actually a transition because instead of using gas fully, they're now using 30%. And over time, that could transition to 100%. So I think that is just an example of what we mean by financing transition as companies, as countries look to shift towards a renewable energy infrastructure.
These other banks are dropping out of the Net Zero Banking Alliance in part because they believe that staying in one way, shape, or form is disadvantageous to them? Why is it advantageous to DBS to stay the course?
I think for us, we are operating in an environment in Asia whereby there are a lot of, I would call lives and livelihoods.
Lives and livelihoods.
Lives and livelihoods. Because if you are quite insistent in saying that everything got to be green and that you got to be green on day one, then that in itself may immediately impact communities that a particular industry is supporting. And so therefore for us, what is important is to demonstrate that we are working with policymakers, with the ecosystems, with companies, to help them to at least have a clear path. And we put out our plan out to 2050 and say that we have a clear path on net zero for the different industries that we handle. And it's a pathway that we will follow. And we believe that pathway will have some ebbs and flows, but generally trending down. And that's something that we think we can stand by and we can help the industries to move.
What ultimately is the reward? Are you being rewarded today for your consistency, let's say, with respect to climate change and net zero? And if not today, how do you expect to be rewarded in the future and when?
Yeah. So I think the reward is already now. If you look at the transactions that we've been doing, so again, take for example the Carrion Water Services in Indonesia. And that is about financing them to supply clean water to 3 cities in Indonesia. So it's Jakarta, let me just check the name of the place before I get it wrong. Yeah, so it's in Jakarta, it's in Tangerang, and as well as South Tangerang. So that in itself is what they want to do. And we were providing a blended finance. So we brought in KXIM, ADB, and as well as IFC into that financing. So that is an immediate opportunity to provide financing. And that does add to clearly the business that we have. And it's not done at a level whereby it is at discounted prices, which is what, 2 years ago, 3 years ago, going green means give me a discount and I'll do it. But here it's about bringing in capital to do what would be perhaps maybe slightly difficult kind of financing. And in there is opportunity.
Kwee, Juan, as you know, labeling is important. There is a difference between green funding and transition funding, and both are important. I think we all know what it means to be genuinely green.
Yes.
That's effectively zero emission. Transition is a much squishier term. What process do you and the bank have to ensure that transition is a definition with real integrity?
So for us, I'll take a step back and say, within the bank itself, we have a very clear point of view that says that at the broader point, when we talk about sustainability, sustainability is just not about green alone. We look at sustainability in 3 pillars. One is responsible banking, another is responsible business practices, and the third is impact to society. So based on that in itself, our board, we have a board-level sustainability committee that essentially governs the thinking that we have. And that steers us in terms of saying, if we are coming into that financing, we would like to know how that can lead to a path, or can we see a pathway towards green? So again, I go back to the Keppel example. They are taking in 30% hydrogen, 70% is still gas, it's still emitting, small amount. But we can see a clear path that setup can take in 100% in time to come. And that path forward enables to know that it will get green from that perspective.
We've all heard about greenwashing. Now, the trend in vogue is green hushing or transition hushing. And of course, if you downplay climate efforts to avoid scrutiny, that's going to have an impact on the supply of capital and the momentum, right, behind that supply of capital. Is this as I describe it, green hushing or transition hushing, as much of a problem here in Asia as it is beginning to be in the United States and perhaps even in Europe?
So again, I'll go back to the fact that many of the activities that you see in Asia is driven by the government's intention to meet their commitment per the Paris Accord. And as a result of that, the activity that we see are genuine movement towards that. So take, for example, last year, I think the whole sustainability or green financing is about $2.1 trillion globally, give or take. And half of that is in Asia. And when you look at what in Asia that money actually goes into, the bulk of it goes into transportation. Mm-hmm. So these are real areas of economic activities that drives the economy, and transportation is huge. And so as a result of that, it's not about transition hushing or what have you, but it's really about meeting a real economic need and an economic development of a country. And therefore, the financing that we see relates to that, building those infrastructure, building those grids that are needed, building those capabilities and storage capabilities that you have in combination with wind and solar to be able to deliver what would be green energy is the direction that we see.
What we've been talking about up until now, for the most part, are the situations DBS finds itself in which the bank hopes, presumably, the answer to the question, can I have the money or will you do the deal for me, is yes. But we'd equally like to know how often ESG and or sustainability plays a role in denying credit or refusing a banking mandate. How often does that happen?
So I think, again, on that front, and this, I think, I don't know how many bankers there are in the room. I guess
do we need
are there any
show
bankers
hands,
in the room?
bankers?
Show of hands. Can I see? None.
They're all shy.
None.
They don't want to reveal themselves.
Okay, none. Okay, I don't have friends in the company. So I think from that perspective, I am quite sure, because this is a requirement from MAS. MAS wants the bank to start to evaluate the impact of climate risk on companies. So from that perspective, the evaluation is not so much of do you have ESG initiative, but rather the angle is really from the angle of risk. Are there risks that are inherent in your business that you are not addressing? And if we are not seeing that, then the conversation with the customer would really be on, we have seen this risk, and so therefore, how are you going to address it? And if indeed it is one whereby there is no clear path nor intention, then clearly that will have an impact on the kind of capital that they can have access to. But so far, all the conversation we've been having would be the clients are aware and they're shifting either their business model or what they need to do.
Are there red lines? And if there are red lines where you won't go as a firm, do the clients know where those red lines are?
Yeah, they do. I think we're quite clear, and that has been something we've been consistent on cold thermal financing. And that is something that we've been putting that portfolio on a reducing basis as it expires. It's run it down. And that's something that we don't continue to do. It was just purely for that purpose. With no transition on the back of it.
No, there isn't.
Yeah,
there is, right?
Yeah.
I was just about to say we're all familiar with the term garbage in, garbage out. How is DBS dealing with the challenge of gathering quality data, monitoring, and conducting due diligence and sustainability for your institutional clients?
I think, again, it goes down to knowing the customers and going down to understanding what they're doing. And then on the back of that, determining the impact that they have on the overall environment, not just carbon alone, but also water and everything else. So it's about on the ground, really understanding what they have, and then perhaps drawing data from different providers to just do that sense check.
I like the way that you defined the way the bank thinks about ESG. The first was sustainability, the second was?
So for us, ESG, the way we look at it is just sustainability is about responsible banking, responsible business practices, and impact to society.
So much of the focus on ESG, to the degree that it continues, is still about sustainability. How often does DBS address the S I'm sorry, well, I guess it is the S and the G, issues like labor practices, human rights, community impact, or governance as risks with your clients?
So for us, when we look at the S element, the obvious one is we rely on the impact on society pillar. Yes, you may be aware we have DBS Foundation, and just 2 years back we announced and say that we are going to contribute 1% of our net profits, so roughly about 100 million, into that fund, into the foundation for the next 10 years for 1 billion. And that in itself is for us to help both from a social enterprises funding perspective to fund new enterprises with a social cause, or to uplift society with digital literacy, financial literacy, and in some instances, just helping society to just live their lives better.
2 quick questions before we finish. DBS, as most of you who are based in Singapore already know, has been, I would say, exceptionally disclosive about the ways in which the bank is adopting AI.
Yes.
And the impact that it's likely to have on your business. Where does AI fit into the bank's work on ESG and sustainability?
So on that front, what we have done recently is we have used generative AI to be able to take in all the ESG reporting that the various companies are doing for those who are declared, and then take that and put it through a list of checklists that we normally would do for ESG assessment. And we use generative AI to allow us to just do the extraction and summary and then compare that against the checklist and pop up what would be a summary of how the company is doing against those checklists, and then use that as part of our input to the assessment that we would then do against the companies. So that's just one example of using of AI.
And where I'd like to finish is with a question that I find myself asking almost every business leader whom I meet with and whom I interview. With almost no exception, they keep telling me how astonished they are at what AI can do and how quickly it is advancing and how much more it can do next week, next month, next quarter. Tell us a bit about your experience.
I think my experience has been, when I first joined DBS, I was the Chief Strategy Officer. And one of the things that we have done since then was, how do we use the AI ML, which is the statistical and not the generative part, to be able to use it to help us identify risk better, clearly serve customer better, and to reduce costs. And on that front in itself, call me silly, call me ambitious. I told Piyush then, who was the CEO, that we've got to try to measure the outcome. I call it the economic value of AI ML. And what does it bring for us? So that means either you help to reduce risk, generate new revenues, or reduce expenses. And we got our auditors to really audit those numbers that we would then declare. So on that itself, 2021, we said it's about $50 million. And then I say I'm going to double it for the next few years, back in 2021. So 22, it was 170, 23 was 370, and in 24 last year was about 770. This year it's still going on that trajectory where we will land. Let's see how the year end ends. But that in itself is just an example of how we look at using AI to help us improve our processes, help us to be more responsive to customers, and as well as reducing toil for our employees. And that has been the benefit that we have seen.
So you're on the same kind of run rate, doubling the financial impact?
Hopefully.
Year over year?
We're half year through, so let's see what the second half brings.
Ladies and gentlemen, please join me in thanking Kwee, the head of institutional banking at DBS.
Thank you, Eric. Appreciate it. Good fun.
Please welcome to the stage Nicole Lim, ESG Investment Manager at Aberdeen, Dennis Juan, Market Director for Asia Pacific, excluding China and Japan, at CDP, and Gabriel Wilson Otto, Head of Sustainable Investing Strategy at Fidelity International, for a conversation with Bloomberg's Cheryl Lee.
Good morning, everyone. It's good to see you all here again. I've been moderating this Sustainable Business Summit for 4 years already, and it's with a very different mood compared with the previous years. I think just recently we have seen so many global headlines, right, about green and sustainable and what's the future, especially in the West. We have the Trump administration and pulling out of the Paris Agreement for the US. We have Europe wanting to cut climate spending to shore up defense. And even in Asia, people are quite preoccupied with the threat of tariffs. There's this major overhang. So with that in mind, today's topic is still quite optimistic about how we want to win the sustainable finance race. And we want to look at how, even if in some parts of the world it's faltering a bit, what's the impact on Asia and where are the opportunities for Asia if we can step up and fill that vacuum and gap? So today, really excited to have this brilliant panel of Gabe, Dennis, and Nicole with me. And before we head into the Asia specifics, I want to ask Gabe, actually, how are tariffs and interest rate expectations affecting the attractiveness of ESG investments and the area of sustainable finance?
So thanks a lot for the question and pleasure to be here with everyone. I think that when we're looking at the topic, given it's sustainable finance, I find it helpful to move back and look at numbers, not headlines. And if we look at what we're seeing in terms of capital flow, client interest, and on-the-ground investment, we're still seeing a really robust environment for sustainable investing in a lot of different jurisdictions. And interestingly, in the US, that's being driven by the economics of sustainable finance. What we saw was in 2024, we saw record investments in the energy transition, renewable energy, and other sorts of areas such as transportation infrastructure. And for me, what's fascinating is that the US was actually spending more than Germany, France, and Italy combined in that space. And based on some BNEF data, if we remove all of the subsidies that are associated with this space and just look at what this means for the outlook from here until 2035, the change in policy only takes 10% off that. So it shows that what's driving investment in this space is not subsidies, it's the underlying economics in a lot of circumstances. For us, I think that's really interesting looking to Asia as well, because we have China as the clear leader in terms of the amount of dollars being put into the investment in this space, and they're more than 2 times what we see in any other market. So both in a dollars sense, but also in terms of percentage of GDP. And this was mentioned in the prior panel, but the policy commitment and alignment of sustainable finance with national objectives, infrastructure development, decarbonisation, improving livelihoods is really part of the core political and policy environment within the region. So from my perspective, you can call me very, very optimistic, but I think that from the fundamental perspective, it still remains relatively robust. And sustainable assets actually reached an all-time high in terms of assets under management at the end of June, and they've doubled over the last 10 years. So very rosy picture, I'm aware, but from my perspective, I think that looking at the numbers, looking at the flow of dollars, you actually get a slightly different story than if you're looking at other areas.
Right. Yeah, interesting. So look beyond the headlines to follow the flow of money. And I think right here on what Gabe said about Asia and China and these big investments in green still, we do have a really interesting chart actually on China's green debt issuance. So among all the, can we have the chart up? Among all the top countries that are issuing green bonds and loans, China has the largest issuance. And what's really interesting to me when I look at this is 2025, you can already see that It rivals 2024 and the previous years, and we are only halfway through the year. So it's really going to be a record-beating year compared with previous, and that's a point of optimism right there. So on the aspect of debt, let's go a little bit to Nicole, who specializes in fixed income and green debt. What are you seeing from issuers and investors' perspective for this region?
Yeah, I think I'd like to echo what Gabe said around sort of looking beyond the headlines a little bit, right? I think we have to bear in mind that ESG has come a long way. It's, a wave of really strong momentum followed by, as we all, probably are aware, a strong push for anti-greenwashing as well. So it's quite unsurprising that we have landed to where we are today, where investors are focused on perhaps more near-term risks, right? But I guess this doesn't mean, at least from our perspective, looking at the fixed income markets, this doesn't mean that numbers have fallen off a cliff. If you look at labeled debt or even sort of ESG AUM, these are broadly in line with broader market trends, right? But I think perhaps to reframe it a little bit, what labels don't necessarily tell you, and I know labels are important, but they don't tell you much about quality. So from our experience, and we manage a range of sustainable strategies, we can see that investors are becoming more nuanced and becoming more focused. They're asking more sophisticated questions and following that, capital allocation towards areas where they can create real-world outcomes. I think similarly for the issuers that we look at as well, they're well on their way embarking on the energy transition. Again, allocating sort of investments to where it makes the most sense for an issuer to deliver long-term value and resilience. So again, it's less about high-level commitments and strategy. I think we've moved past that a little bit as an industry and more about implementation, one that's rooted in materiality, credibility. So again, beyond the noise, what matters most for us is sort of the space becoming more nuanced, more focused, less about labels, more about substance.
Right, and that sounds good. So I want to go a bit now to Dennis, who looks at disclosures and activities of corporates in this region quite a fair bit. So Dennis, what are we seeing? I mean, earlier on, we talked a little bit about green hushing, right? And how even if you are doing some corporate climate action, you might want to stay quiet because you want to avoid political attacks, or you want to avoid people labeling you as a greenwasher. So for Dennis, what are you seeing in corporates in this region and their activity, and are they still doing it, or are they doing it while keeping quiet? What's the sense that you get on the ground?
Well, we're in the middle of the 2025 disclosure season 2 CDP right now. So it's kind of also mid-year. I can only give you the sentiment that we're feeling on the inside of CDP, which is that it seems there is more interest than ever. And thus, although you're all in business and finance and past performance does not predict the future, I can really only talk about that trajectory ever since the Paris Agreement. And that increasing trajectory in companies' interest, corporate interest, financial interest, and we've gone from 8,000 companies disclosing to 14,000 to 25,000 to 2/3 of the listed market capitalization of the world disclosing data to CDP. And if I'm saying that by the middle of the year right now, then we are seeing greater uptake than ever, then it looks like that mere politics and mere green hushing and mere words are not tamping down the recognition that environmental risk is financial risk. This is a business necessity now to the world economy, and data is an absolute necessity to make the right decisions. And it is undeniable that Asia has now, to CDP, over half of the world's disclosures and numbers of companies taking action are in Asia.
Mm-hmm. Right. So now I have a question for the audience, actually. We have a poll on screen, and it will come up in a bit. You can scan the QR code and give your answer to this question. So what factor will most determine Asia's ability to lead in sustainable finance globally? And that's a question that I do want to pose in a slightly different form to our panel as well. So with US and parts of Europe facing political pushback against ESG, is Asia going to fill that leadership vacuum, and what would give Asia the edge to do so? Dennis, do you want to start us off?
Okay, are we going to fill the leadership vacuum? Asia's not waiting to fill a leadership vacuum. Asia needs to step up out of necessity. For societies, then this isn't about ideology, it's about exposure, urgency, and alignment. For businesses, this is about survival and competitiveness, and Asia is moving ahead already. For policymakers are already suggesting that was it 13 different jurisdictions are taking on ISSB. 70% of regulators are about to mandate environmental disclosure. Singapore, Japan, the regulators here are doing stress testing. So Asia's not sitting around waiting for politics to dictate what's important here. It has already been a leader and is continuing to be so.
Mm-hmm. How about Nicole? Where do you think Asia's advantage lies? And in a bit, we will flash the audience response to see who thinks they agree.
I think I echo the similar sentiments that Dennis made and Mr. Han earlier on made, right? Asia will take on leadership, but not in the same way the West has, I think, for many reasons, but crucially because of the wide-ranging economic, demographic, developmental needs that are in the region, right? We bring a kind of leadership that is one that's rooted in solving for growth, resilience, and innovation all at once, simultaneously. So what is clear is that there is a need for sustainable development in the region, whether it's expanding clean energy, upgrading water, transport systems. Majority of the world's infrastructure needs through to 2040 are in Asia. I think the number is around 60%. So the demand is real and the demand is structural. Supply chain, if you think about where the world supply chain exists, Asia's role in global supply chain allows it to influence the transition in ways that many other regions cannot, right? Simply because of how the shape of the supply chain is like. So not just in terms of emissions, but in terms of innovation, labor practices, and importantly for long-term resilience. So there is an opportunity to embed sustainability from the get-go within Asia and not just retrofit it later. So I think all this to say, Asia might not take the loudest position on sustainability, but there is room, or there is definitely a strong case for Asia to shape the agenda in ways that are locally relevant and globally important.
Mm-hmm. And your thoughts on this, Gabe?
Just to quickly add a few points, I would completely agree with what was just said. From my perspective, the things I find very innovative and exciting about Asia Pacific is, one is, as was highlighted earlier by Mr. Han, the context of the local markets and the different dynamics means that there's no one-size-fits-all solution that can be deployed everywhere. So for me, what's that has resulted in is a huge amount of innovation in a lot of different markets to solve the problems that they're facing. If we look at what this means, Asia Pacific is now the leading region for transition instruments being issued globally. So we're already leading on facilitating transitioning and financing transition. If we look at within mainland China, we also have leadership in terms of battery technology, in terms of solar, in terms of EVs. All of these sorts of areas are building up to solve the challenges that are faced in different markets. And so from my perspective, I think that the policy side in terms of the disclosures, the frameworks that Dennis was highlighting, are a critical enabler of providing the ingredients towards that solution, but then also the on-the-ground innovation in a lot of different markets, solving the local problems that exist, focusing on transition, balancing that with economic livelihoods and economic growth, is a very unique problem to the region that we're trying to solve for, which provides an opportunity for leadership in a different sense than in terms of what you might see coming from other regions.
Mm-hmm. And let's pull up the results of the poll from the audience. It seems that regional capital inflows, most of you think that that's the factor that will most determine Asia's ability to lead. And some of our panelists mentioned that earlier in terms of the need for infrastructure, clean water, energy transition, and so on, and how that is going to affect capital and investment demand. So with the need for infrastructure actually being one of the driving factors for Asia ESG, where do you find the opportunities? Dennis, where are some of the opportunities that investors or corporates can look to when it comes to the theme of adaptation?
Well, I know that these guys are wanting to talk about transition. I want to make sure that we don't forget about adaptation, and especially Asia being one of those locations that needs adaptation finance the most. And when you ask about opportunities, then there's a flip side of what CDP gathers from as many corporates and as many finance folks as players as we do. We also collect information from over 1,000 cities and states and regions, which has an awesome acronym of C-STAR. And 12% of the world's population lives in a place that discloses information to CDP. All in one place, and many of them submit their project financing needs and adaptation needs. So there's a couple of opportunities that I would highlight. In the Philippines, there is a city called Dipolong city. In Thailand, there's a city called Sakon Nakhon city, and both of these have water management adaptation projects needed to get real-time flood warning for water impounding, mini hydro dam power generation, and all at the same time being able to irrigate rice paddies. You're looking for opportunities. There's hundreds of adaptation needs around Asia, more than transition as well, which is also tremendously important.
Yeah. That sounds good. So many opportunities in terms of adaptation infrastructure, but the key question I think for many investors and corporates is, are they good in terms of returns? So Gabe, how are we seeing that in terms of adaptation projects? The returns, are they market rate? Are they above? Tell us more.
So I think when thinking about investment in adaptation, it's been slower to see the momentum that we've seen behind green finance and also climate mitigation, in part because it's been seen as giving up on achieving the mitigation side. I think that view is now changing. And if we look at mitigation finance, it's absolutely critical in Asia as well, especially given that we only have typically 10 to 20% of losses are insured versus 50 to 60% in developed markets in other parts of the world. So that creates a huge economic need for adaptation finance. In terms of the individual projects, there's some really interesting opportunities within the value chain of adaptation finance. So who are the providers into some of these infrastructure projects, into using nature-based solutions for mitigation and adaptation combined in terms of protecting from sea surge and other sorts of components. So there are ways to build in revenue streams associated with some adaptation initiatives, in particular heating, cooling and other sorts of areas, and green buildings and other infrastructure. And so in terms of a direct answer to what does that mean for investors, there are huge, exciting opportunities within that space. Some of the most obvious and relevant ones for Asia are around green buildings and retrofitting and increasing the efficiency of buildings. You get a massive saving on energy. You can typically increase the rental yield, and you can get commercial rate returns for those investments. So it's looking at how you can think of this as part of a business strategy in terms of resilience of future cash flow, but also maximising near-term returns. So from my perspective, within the end of adaptation, but also the value chain, there's a lot of exciting opportunities.
Right. So is Fidelity already putting money towards those investments you mentioned, like green buildings in this part of the world?
Well, we do have 2 dedicated impact funds that are doing building refurbishment. When we don't have that capability in Asia yet, but we are invested across the entire value chain of resilient CapEx, green CapEx, and the flow into adaptation assets.
Mm-hmm. Right, and I'll move on now to Nicole, and where you're seeing in terms of these issuers in the region, are they investing in adaptation? Are they disclosing it? And when you are looking at their bonds, does it help that they're disclosing this?
I think very short answer to whether they are disclosing it, the answer is no, and I'll come to why that is the case in a bit. I think in the Asian credit market where I mostly spend my time in, we see quite a natural alignment between the issuer base and adaptation and resilience, right? So within our universe, for those of you who are familiar, we have many core infrastructure or infrastructure adjacent players. These are your state-linked utilities, your conglomerates that are quite central and core to the physical and economic backbone of the region. So I think instead of thinking about adaptation perhaps in the same way as mitigation investing, where you have a thematic fund, the way we're thinking about it, at least within our universe, is that it is a systemic issue. It is a risk overlay, if you want to think about it that way. Because I think if you take a longer term view, one where physical climate risks become more pronounced against the backdrop of the development needs that we've already discussed, you can quite easily see where you can either mitigate downside risk or, at the very best scenarios, find opportunities within the companies, within the issuers, projects that are able to deliver that long-term investor value with resilience, with adaptation in mind, not just for the issuer or the entity itself, but also for the broader society it operates in. So for us, I think that's the view that we're taking. As with any sustainable finance problem, the challenge is accessing financially material information that can then guide capital allocation, right? So this is what I personally am spending a lot of time on in trying to understand how the market, not just us, not just issuers, but collectively, how do we speak the language of resilience and adaptation? How do I encourage or guide or pick issuers that can then articulate how much OPEX, CAPEX is being directed towards resilience and adaptation spend? I think these are the few pieces that we sort of need to solve for, but it is inherent within at least the space that we look at, and for us, solving for that challenge is critical for our fiduciary duty as well.
Right. So can we say that if you're a company in Asia, as a corporate here, you invest in these adaptation projects to help your company mitigate climate risk, that's going to help you when it comes to issuing your green bond?
It is creditworthiness, right? If you're able to withstand risks that will manifest not tomorrow, but in 5-10 years' time, and if, again, you're issuing a bond through to 2035, 2040, those things are key to your creditworthiness and your ability to repay your debt. So I wouldn't put a price to it for now, but I think it is part and parcel of the way increasingly investors are looking at investing.
Mm-hmm. Right. Okay, so let's turn a bit now to the last segment, which I want to talk a little bit about disclosure, since Nicole brought it up. How can disclosure benefit firms in this region? I think a lot of us are still new or in the early stages of sustainability reporting, and it is pretty confusing, especially when there are different countries in the region. I mean, Asia is pretty diverse and not homogeneous at all. So Dennis, can you tell us a little bit more about how disclosure is going in this region and what our regulators are doing and whether more can be done? Or maybe they should do less.
Maybe I should do what?
Maybe the regulators, they should do less.
Maybe, actually, no. I've learned a lot in my time here, and I think the regulators need to do more and be more coordinated to get rid of that fragmentation. Asia as a whole is not homogeneous. Gabe brought this out very much. There are North Asia, it turns out, Japan, Korea, Taiwan, really quite advanced on disclosure. China's our biggest market for disclosure. India's rapidly growing up, and Southeast Asia is making leaps and bounds from a low baseline. But you want to know, if I had to speak to the audience, what are the benefits of disclosure? It's not just a compliance burden. Please don't think of it as a compliance burden. Internally in CDP, we talk about the main drivers and main benefits of environmental disclosure. And we break it down to A, B, C. A, standardized data, forced to measure it, will give you access to capital. B will give you business intelligence. You'll see risks and you'll see opportunities. The attractiveness of ESG is that through disclosure to CDP, we saw $16 trillion of opportunities disclosed when everybody was disclosing on a common platform, and C would be compliance, because as we said before, then 13 different jurisdictions are bringing ISSB into play soon. If you want to get ready for that, then a standardized way of disclosing would help you along that way. A, B, C. Now, companies can help by asking their supply chains, using the power of your purchasing power to ask your supply chains and asking thousands of companies, which would be investable as well to disclose. But accessibility is also key. To unlock, really, disclosure, then making it appropriate to SMEs is critical as well. And CDP has an SME questionnaire so that we are also servicing that level of company, especially in your supply chains.
Right. Thank you so much to our panel today. That was really great discussion. I learned a lot about where the pockets of opportunities still are and how Asia has advantages in some areas for the sustainable finance race globally. So thank you so much again for your time.
Thanks, Cheryl.
Thank you.
một ngày đàng, học một sáng khôn. A day of travel can bring a basket of wisdom.
Tak kenal, maka tak sayang. You can't love what you don't know.
Build a deep connection. Get to know more people, supplier, customer, authorities.
And most importantly, you have to meet them face to face.
เข้าเมืองตาหลิวต้องหลิวตาตาม
Kenapa ASEAN? Karena ASEAN adalah rumah saya. Untuk itu, mari kita berkolaborasi bersama.
Please welcome to the stage Chatsiri Sopanpani, President of Bangkok Bank, for a conversation with Bloomberg NEF's Joe Lee.
So first of all, a huge thank you, ladies and gentlemen, for being here with us today. I am very pleased to have Kun Chatsiri here with us to honor us with his presence and also to share some of his insights with us. You might already be familiar, Kun Chatsiri is the president of Bangkok Bank, the largest commercial bank in Thailand and one of the biggest regional banks in Southeast Asia. Under Kun Chatsiri's leadership, Bangkok Bank has evolved its business and been actively driving initiatives around sustainability within the banking sector. Today, we have the opportunity to hear from Kun Chatsiri himself on how Bangkok Bank has evolved his business and how they are winning the sustainable finance race. And with that, Kun Chatsiri, if you could share a bit about your perspective. So sustainable finance is a relatively new but fast evolving concept. And in the latest Sustainable Debt Monthly published by Bloomberg Net on 14th of July, sustainable debt issuance in June totaled 131 billion. This huge number seems big, but if you put it in perspective, it just makes up 3% of all global debt issuance for the month. Now, how do you see sustainable finance role in Asia, specifically Southeast Asia, especially if we compare that with other regions like Europe?
Different regions have different challenges, and Asia and ASEAN also have its own path to take. Yes, I think many of the industry and establishment in the US and Europe have been there for quite some time, whereas many of the production facilities in Asia and ASEAN are relatively new. So we have to make the best use of the facilities already have, how to do the transition, to reduce the carbon emission and to gain energy efficiency. At the same time, how can we do the transformation so that the business model for the new business would also move in line with the sustainability. We could see that over the last 10 years, there's a significant shift in the renewable energy and significant investment have taken place in ASEAN. Yes, with the drop of the solar energy facilities as well as wind turbine, we see significant increase, more than 10 times in, say, between 2019 to 2022. And the beneficial process has been in Vietnam in a significant manner, together with other countries in Thailand, in the Philippines, and Indonesia, for instance. Furthermore, in the geothermal, Indonesia also has moved on geothermal, make the best use of their natural resources and produce power from that purpose.
Yeah, that's a very interesting point you made, Khun Chasiri, about geothermal. If you could share more about how that has actually impacted Bangkok Bank's focus and strategy.
Yes, geothermal has a significant potential, and the Philippines and Indonesia have probably among the largest deposits, especially in Indonesia, and there's significant improvement can be done further. I think in the Philippines it's about some 15% of the production of power from geothermal, whereas in Indonesia maybe about 5-6%. And so there's still much remain to be able to explore and move further.
Right. Well, that definitely represents a lot of opportunity, especially for Bangkok Bank. But moving closer to home ground, Thailand. So this quarter, Bank of Thailand published phase 2 of its taxonomy, which now covers agriculture, construction and real estate manufacturing, and waste management. So how had Bangkok Bank been preparing for the regulatory changes?
Yes, our central bank, the Bank of Thailand, have been working with the Thai Bank Associations and come up with the taxonomy, yes, as you mentioned, move on to the phase 2, and how can we move from the energy and transportation now to agriculture, to manufacturing, and also to waste management, so that we would move for the sustainability, also for carbon reduction, and also less green gas emission.
Right. And Khun Chasiri, you also mentioned the shift of the focus for Bangkok Bank over the last 10 years to solar wind turbine. So have you seen these regulatory requirements impact the financing of these different type of renewables?
Yes, I think we see more intensity in this area, especially now that the cost has been reduced significantly, together with the cost of the energy, battery storage, that also make it even more feasible. In Vietnam, for example, I think they have to set a target of by 2030, 50% of the household and office would have the solar roof.
Yes.
I think that's also something quite significant.
Great. And kind of going back to the phase 2 focus, how is Bangkok Bank, if you could share, supporting its clients on their transition journey for those in the high emission sectors like construction, for example?
Yes, the central bank has asked banks to work with our customers. So 4 or 5 industries have been selected, as mentioned earlier. And how can we provide them with greater awareness of the necessity of the transition and also the business transformation, and how can we provide some of the assessment of their impact, and how can we provide the support financially so that to make that feasible for our customers. And these are the areas where we have been working with our customers in different areas. Agriculture, for example, because of they can use more technology to help save some of the, and make use of the heat and so forth, and create better efficiency, or the methane emission can convert into electricity or some biogas, for example.
Right. Yeah, that's very interesting case study of how Bangkok Bank has helped its client. Can you share other challenges that Bangkok Bank faces in this transition finance journey, and how has Bangkok Bank tried to overcome them?
Yes, this is quite a challenge area. I think for scope 1 and scope 2 is fine, and for scope 3, how to work with our customers for long-term sustainability, and also the medium-term to longer-term zero carbon emission, and that is quite an important part.
Yes.
And I think we have to work with our customers since the draft of the Climate Change Act in Thailand is under consideration, so maybe in effect in 1 to 2 years. How can we make sure that we would be able to work with our customers to move accordingly? Because in that act also has many components, including the carbon emission trading, as well as some of the measures that we have to be able to disclose.
Understood. And Khun Chasiri, kind of along this same line of thought, if you could share some specific client examples, Yeah, so that the audience can be more educated in this area and also understand what are some of the client examples that Bangkok Bank has been working on.
Some of our clients have moved away from the fossil fuel and move into the more renewable energies, and so make investment in the battery, especially for the EV and especially for the truck. So that make a shift, and many of this has been done over the years. So it's not a short-term basis, but it takes 5 to 10 years, for example. Some of our other customers make use of then resources, and as mentioned earlier, in the geothermal and for the energy production, and eventually have a potential for the hydrogen production. And I can see that cross-country in the region, I think Indonesia and Singapore also have an agreement for the renewable partnership that I think probably will be quite significant. And Thailand, Malaysia, Singapore, and Indonesia also have arranged for some of the carbon trading standardization, which I think will be quite important. Can we work with our customers?
That's great. And thanks, Khun Chatsiri, for sharing so much about the opportunities that we have ahead of us. So in closing, if you could share some of the lessons Southeast Asia region can learn from Europe, and how do you see ASEAN, particularly Thailand, leading the way?
I think different countries, different regions have their own characteristics. And I think for ASEAN region, we have to find our way to work closely together and find effective solutions to help for the sustainability and also for the climate change impact.
And is this the key message you would like to leave the audience with today?
Yes, I think we should work closely together to achieve those targets and for our better world and also for the sustainability.
Thank you very much, Khun Chatsiri. If you could join me in thanking Khun Chatsiri for sharing his insights.
Thank you very much. Bye.
Please welcome to the stage Conrad Tan, ESG analyst at Bloomberg Intelligence.
Well, good morning, everyone. Welcome, and thank you all for coming. I've already had the pleasure earlier of meeting a good many of you, but for those who haven't met me, I'm Conrad Tan. I'm an ESG analyst at Bloomberg Intelligence, and today I'm going to take you through a few key ESG risks that we see emerging globally across different industries. And if there's one key takeaway from my presentation today, it's that despite political tensions and the very real pressure on ESG that we're seeing, there are still many multilateral efforts in progress to fight climate change, which is of course a good thing, but it does mean that many companies and industries face intensifying transition risks in parallel with the physical risks from climate change that we all experience today. Briefly on Bloomberg Intelligence, or BI, we are an independent research platform of Bloomberg with around 500 research professionals worldwide, covering all major asset classes across through different lenses, including, of course, ESG. Within ESG, we are a global team. I'm based here in Singapore, and we also have analysts in Tokyo, London, and New York. Now, we spend much of our time helping investors to understand how different ESG risks affect different industries, including potential channels of financial impact, and ultimately which ESG issues are most material for each industry. So, taking the carbon transition as an example, this is today one of the most discussed ESG risks, understandably so, and yet our understanding of how it impacts different industries continues to evolve very rapidly. So at Bloomberg Intelligence, we track the world's top emitting companies globally across different industries in order to assess both the level of ambition as well as the credibility of their decarbonization targets, and ultimately the progress that they're making year by year towards those targets. This gives us insight into which companies and industries are leading or falling behind. This may seem less important in today's political climate, but it matters because emissions regulations that are already in place are becoming stricter by design, which exposes many companies and industries that are lagging to increasingly greater financial penalties, as we'll see shortly. Now, one of the key insights from our analysis is that many industries will have to rely on carbon offsets to get to and stay on a science-based decarbonization pathway. This adds a new dimension to the transition risks that companies face, because companies now have to face a complex regulatory and policy landscape for carbon offsets and potentially a market-based carbon price that is volatile. A good example of this is the airline industry. So starting October this year, almost all airlines globally will have to start recognizing charges for carbon emissions for the first time. Why October? This is when the UN ICAO agency publishes something called the Sector Growth Factor, which measures the growth in international aviation emissions versus the pre-pandemic baseline. And this is going to turn positive this year in respect of 2024 emissions. The only uncertainty is how high it's going to be. This means that airlines now face a new financial risk. Now, big airlines have already started to try to limit the emissions growth by using or switching to cleaner fuel. But as some of you will know, there simply isn't enough of it. So globally, the supply of sustainable aviation fuel in 2024 was less than 0.5% of total conventional jet fuel. What is available is also expensive, on average about 3 times the price of conventional jet fuel. So airlines are going to have to buy offsets for their excess emissions, and the future price of these offsets is a great source of uncertainty. Something similar is emerging in international shipping, which of course underpins global trade, supply chains, and distribution networks for many other industries. So from 2028, ships will have to use cleaner fuel or pay up to $380 per ton for excess emissions to meet decarbonization targets set by the International Maritime Organization. These draft rules were agreed in April and are set to be formally adopted in October. It's worth emphasizing again that both international aviation and shipping, and international aviation is not just airlines, by the way, it also applies to air freight, which means logistics companies that use air freight. Both of these underpin global supply chains and downstream distribution networks for a whole host of different industries. So costs here are likely to feed into multiple other industries as well. Another key risk that we see emerging that hasn't been adequately internalized in most industries is water scarcity. Our analysis shows that water is a financially material issue for close to half of the more than 100 industries globally that we analyzed. Of these, around half depend on water directly for production or development, and many others depend on it for things like cooling and extraction, and still others have to deal with wastewater disposal risks. In tech, for example, semiconductors and data centers are some of the most exposed industries to water scarcity risks. In critical infrastructure, our analysis shows that 1 in 5 operational power plants is likely to be in an area of high or extremely high water stress by 2030. This, of course, makes them more vulnerable to operational failures and also exposes the companies that own these power plants to much higher financial costs in order to harden the infrastructure. These insights and a lot more are available in a deep dive report that we published on water risks earlier this year. You can read it on any Bloomberg terminal, or feel free to get in touch with any of us if you're keen. Now, to better understand the market impact of different ESG risks, we've developed an app that allows us to analyze industry-specific ESG events such as product recalls, labor disputes, or oil spills, and to look at the impact on companies' share prices as well as credit spreads over different time horizons. We're able to do this by drawing on the vast library of extremely high-quality content produced by our terrific colleagues from Bloomberg News. And this gives us insight into what the market reaction is to different kinds of ESG events. So for example, if we take the packaged food industry, one of the findings we had was that ESG events that hurt a company's reputation, for example, allegations of abuse in the labor workforce or in the supply chains, tend to result in more persistent underperformance versus operational disruptions from ESG events such as strikes that produce sharper but also shorter-lived price movements. Basically, the market differentiates between operational ESG disruptions that are seen as resolvable relatively quickly, even things like product recalls, versus issues such as supply chain abuses that raise questions and longer-term concerns around governance and risk management that ultimately impact valuation. We also look at what ESG issues impact company share prices the most at the industry level. To do this, we draw on our Bloomberg ESG scores that measure companies' ESG performance on an individual issue level. We're then able to analyze this in detail and look at what the impact is on share prices for better performing companies versus worse performing companies. So in the example here, we see that in metals and mining, share price or share return outperformance is more strongly linked with performance on workplace health and safety, which makes sense if you think about it, because metals and mining is a dangerous business. So if a company is having multiple accidents in the workplace consistently, that tends to indicate structural issues in the way that the company is managing operational risk. And over time, this translates into potential regulatory penalties, or in extreme cases, even withdrawal of mining concessions. Moving on to climate, we now track climate damages across different regions globally, and we're continuing to expand this data set to add more detail. Now, this gives us insight, among other things, into this gives us insight into the strain that damages from climate-related disasters is having on public finances, which is of great interest to bond investors because ultimately it affects the issuer's ability to repay. This is especially important in, for example, the US municipal bond market, where local governments don't have the ability just to print money. It also gives us an idea of the risk exposures of insurers and reinsurers who may be exposed to rising claims. As with water, the risks vary across different industries, and industries like utilities, power plants tend to be more exposed than others. Those insights are also available in a separate deep dive report that our team has published early this year. Again, you can read it on the terminal. You can get in touch with us if you're interested. While the focus has been rightly on environmental issues such as climate, I do want to highlight data security and privacy as a key emerging risk that we see. This is very poorly understood as a financially material risk across most industries. It's often seen as a technological issue. So companies that aren't focused on technology often don't develop the expertise to manage it properly. It tends to manifest itself in different ways. There are multiple channels of financial impact, which is why some of the biggest companies now take out cyber insurance, although the level of adoption remains very low, and especially so among smaller companies. I will add that the spread of artificial intelligence tools is a major source of new risk for data security and privacy, particularly in the ability of very precisely targeted social engineering attacks against senior executives of companies, many of whom are here today. And I think most companies really aren't prepared for this. So on that hopeful note, I will summarize. Basically, there are many ESG risks still emerging across different industries. Some are due to emissions regulations becoming stricter by design, as we saw. Others, such as water risks and data security and privacy risks, because they haven't really received adequate attention prior to this. And all of these risks don't affect different industries equally, which is why it's critical to understand how these exposures vary and the channels of financial impact for each industry. We do, as a team, discuss key ESG topics with industry experts on a weekly podcast that we host. For example, in a couple of weeks, I'll be discussing the implications of the new International Maritime Organization rules on decarbonizing shipping with one of our guests. So if you're interested, feel free to have a listen. I promise you our team is usually more upbeat on this podcast than what you just heard. With that, I thank you very much, and I hope you have a great conference ahead. Thank you.
Please welcome to the stage Winston Chow, Professor of Urban Climate at Singapore Management University, and Christina Ng, Managing Director of the Energy Shift Institute, for a conversation with Bloomberg's David Stringer.
You're there? That's fine. You get the nice long couch. You can lie down as well.
Well, thanks everyone, and thanks for being here for this session. What a really opportune moment to talk with two really distinguished guests about targets, ambition, rules, and where we stand. I mean, just to set some of the context here, if we think about 2024, record heat that meant the planet exceeded the 1.5 degrees Celsius temperature threshold on an annual basis for the first time. We've seen dozens of banks, of asset managers, of other sectors of the finance industry leave their associations that have aimed at setting standards around climate action. We've had airlines, companies from Walmart to Coca-Cola back away from their targets around emissions reduction and other environmental action. So plenty on the depressing side of the ledger, but yet we're still seeing an energy transition that in this region in particular in Asia is attracting huge amounts of capital. Energy transition investment topped $2 trillion in 2024, according to our colleagues at Bloomberg NEF. And just this month we saw, as I think we'll come to talk about, the International Court of Justice issue an advisory opinion reminding countries of their responsibilities when it comes to that 1.5 degrees Celsius threshold. So with that, let's talk about that current climate North Star, the Paris Agreement's main goal of limiting warming to well below 2 degrees, and I'm paraphrasing, but preferably to 1.5 degrees. Is it still achievable? Have we blown past it? And if we have blown past it, why have we? I'm going to come to Christina first. Christina.
Right, really tough question. But if I could just maybe start with this. Innovation and action never happens with realism. And if it did, if we did rely on realism, humankind wouldn't have evolved, the way we did, and technology wouldn't have evolved. I'm not saying we should be delusional, but if we keep moving the goalpost, move away from 1.5, then we'll keep moving that goal next time, the time after that, and the time after that. So, and just because if we have moved past 1.5, doesn't mean we shouldn't still aim for it. I think we should still aim for it. We just need to understand what went wrong, what failed. We need to fix it, and we need to accelerate quickly.
Winston, before I come to you, I mean, when we think about what has gone wrong, briefly, I mean, what are some of the failures that you've observed?
Right. So I would say that financial markets, I mean, I've got two reasons, but I would say the first one is that financial markets are still pricing for delay. And one reason for that, in our opinion, is the lack of policy clarity. So we've got signals from governments and regulators that are often vague or permissive. And let me take an example. So I think most of you would have heard of Japan's Green Transformation Plan, the GX plan. It's a really bold, really ambitious plan for financing industrial transformation. From a climate finance perspective, I have questions. So, are companies, are sovereigns are allowed to raise transition bonds or green bonds without any fossil phase down requirements? What are the near-term emission reduction targets? Near-term, not long-term. Yep. So those are the questions that really make me question, are our climate finance frameworks really geared for that science-aligned framework? But Japan is not the only one. I mean, I'm seeing across Asia a divergence. The market is fragmented when it comes to policy setting and financing. We go from a really good taxonomy, sustainable finance taxonomies, for example, in Singapore has one of the most science-aligned taxonomies, to others where they're still allowing new coal, new gas projects, maybe unabated, we don't know because it's so unclear, to be financed under the transition label.
Yeah.
So that sort of signaling to the market is really problematic.
Let's come back to what we can do to address some of those points, but to the main question, is 1.5 dead? And if it is, why? Winston?
Thanks. First, agree totally with what Christina has said about the issues driving why we've crossed 1.5. I would be a bit more forceful in maybe attributing the failures to governance, policies, and lack of ambition, but it's also noting that businesses follow what governments dictate. So thank you for articulating that. Now to your question, is 1.5 dead? No, it's not. It's just a target, it's a metric. I would like to paraphrase from the person I was named after, Winston Churchill, about his saying about democracy. It's the worst form of government except all others. Similarly, 1.5 is a target. It's the worst form of target, but can you think of an alternative? The answer is no. We need something that is clear, that people are familiar with. But the lesson is that 1.5 is not the end of it. So if we look at last year, you mentioned one of the metrics, one of the temperature databases went above 1.5, but there are about 4 or 5 others that still are below 1.5 for now. The IPCC has sort of projected that by early 2030s or thereabouts, all the other databases will consistently be above 1.5 for the entire year. So we still have that little bit of wiggle room. But I think some of the messaging is a bit mistaken. It's not that we passed 1.5, we're dead in the water. No, the science has shown that, or the assessment of the science has shown that if we go to net zero by 2050, there is still a chance of us peaking and coming back down to 1.5 or below by the end of the century. So that sort of information is also useful to tell people there is still hope to actually get back down to something of a livable world if we get our act together, integrate science-based policy, integrate the business frameworks, the information from taxonomies, the education of executives in this room today and students in the future to align ourselves, to align our action together to get us back to that 1.5 target by the end of this century.
That's a positive outlook on the conundrum. Let's see if the audience also agree, and you've heard from our panelists on their view about the target, but we want to understand what you think. So if we can go to our first poll, if that's possible.
My bet is everybody will say no.
And as you can see, the question is the 1.5 degrees Celsius goal still a useful target for business and finance specifically? And hopefully, if you can vote, we'll see those results. Okay, well, while we're waiting for those results to come in, I'm not going to presuppose the outcome, but if, hypothetically, if we were designing a new system of targets and standards from here, or if we accept that a new metric, a new goal is necessary, how do we approach that? Is a temperature-based threshold the right metric? Are there other factors that we should be considering? What would a useful new climate goal, a rallying point for ambition look like? Winston, I'll come to you first.
Yeah, sure. I would say just use 1.5 and tailor it for your own purpose. That would be the easiest way forward. To get all 195 countries in the UN framework to actually agree to 1.5 was a massive undertaking. And if you want to come up with a new metric, it's going to take a very long time for agreement, especially in this day and age of uncertainty. So my suggestion, use that, work with scientists like myself or colleagues who are familiar with what the implications are for risk, what the implications are on how you can reduce your emissions, both from the mitigation side, but from the risk side in terms of adaptation. One can do that. That would be my suggestion as a sort of a preferred way forward, as opposed to coming up with something new that might, in the end, lead to a more uncertain, more confused world, and also give the opportunities of people who are for delay, for denial, for contrarianism, to muddy the waters and reduce the initiative, reduce the momentum for any sort of action.
I think there's some broad support in the room. We can see, 41% of those of you who responded, thinks it is still a useful target. But we can see here, and maybe this is a point to come on to, that there's a view clearly, and I think a lot of people share this, that one broad target for the globe that's not differentiated for every industry sector maybe isn't the most useful way of organizing progress on climate action. Christina, you mentioned some of the pitfalls we've seen with attempts to meet 1.5 degrees. Is that a way to go? To allow sectors, regions, countries to have that differentiated responsibilities and progress?
Yeah, I would say no matter how we kind of look at whether we're looking at regional or sectoral perspective, what's really important is that, so going back to that question that you asked Winston as well, whether we are staying with 1.5 or if we're moving to a new target, I agree with Winston, we should stay with 1.5. But even if either way, we just need better compass, better compasses. We need better roadmaps. You know, at the moment we have this 2050. Everyone was really rushing out and, really, latching on to that 2050 target. But no one knew what they're going to do in the next 5 years. Where is that map? That maps out your 20, 30 years of journey. Like if we don't know what we're going to be doing in 5 or 10 years, that is why we are are missing the 1.5 pathway. So yeah, I think short-term accountability, mid-term accountability is extremely important if we are going to be setting that new standard.
And as standards evolve, or if we look to new standards, I mean, do they need to be broader in scope? Do they need to look to other elements of the transition, whether that is the climate justice, whether that's impact on communities? The goals as they're described now are pretty solidly targeted at, holding temperatures back and in a sense emissions reduction. It's a broader story about sustainability and about the climate transition. Would you favour sort of a wider view and a wider lens on what ambition and what targets should be?
I think the 1.5 is, in terms of the temperature goal, it's just one of the benchmarks, and it's really just there for us to aim. Everything else should be aligned. And so yes, maybe after having that temperature goal, we should be looking at what different sectors would look like when they actually move to that 1.5. But again, I still think that it's that accountability. Instead of maybe kind of supporting or supplementing that temperature goal, we need to be asking, if we are at 0 gigawatts of clean energy today, in some parts of Asia, almost 0, in 2 years' time, can we get to 1 gigawatt? And that is, I think, the kind of benchmarks that we really need to be asking and giving ourselves as a target, instead of just, latching on to that temperature.
Not quite. Winston?
Can I quickly add on?
Please,
Yes.
absolutely.
So this will be a good time to bring in the sort of issue that was raised last week with the International Court of Justice, and it helps to inform this discussion about using 1.5. So in the ruling that came out last Wednesday, and I was in Kenya with a whole bunch of IPCC authors working on a special report, we looked at it and said, wow, everything in there, the science basis came from what we worked on in AR6. And they put it front and center that 1.5 is a North Star, if not the North Star, and it helps to broaden the discussion now that since they've concluded that countries can be liable for climate justice issues, for punitive action against industries in the fossil fuel sector, to open themselves up for possible reparations for climate loss, separate from climate losses and damages. This adds on to the equation for businesses, for companies, for countries, within countries as well, to do proper due diligence. That if we'll stick to 1.5 and look into that. The hope is that when doing your due diligence for managing your transition, for looking out for how to finance or adaptation or mitigation, the game is changed with this ruling in the sense that now you can expect potential litigations to happen, and it's a big concern for that. You have to watch out for that. And this sort of acceleration of the momentum from the legal side would help with the business sort of impetus towards climate adaptation and mitigation, which we hope can help address the consequences of exceeding 1.5.
Yeah, quite. You mentioned quite aptly the IPCC work. that you've done, and obviously you are a co-chair of one of the working groups since 2023. I guess I'm interested to ask you in the context of the US withdrawal from the Paris Agreement. We've seen the US withdraw funding for the IPCC process and the departure of some very eminent scientists and colleagues of yours. When you look to this cycle and to the next report, are there risks to that work? Are there, how serious are the downsides to the work of the IPCC?
Apart from premature graying of my hair, I would say a lot. We need the US contribution. A lot of very good scientists are based there that can help inform the process. Particularly in this cycle, we are, for the first time in my working group in 32 years, we have a chapter on finance, a chapter specifically looking at adaptation finance, losses and damages, how that can inform potential governmental frameworks, which can have secondary impacts on the business community, both within the countries and operating across countries as well. That sort of insight will not be complete if we are omitting the contributions from the US towards the assessment, as well as in supporting the IPCC and the UNFCCC framework.
Yeah, quite. And when we think about that broader absence of US climate leadership, are there opportunities for countries in this region, for organizations in this region? Christina, thinking beyond just the IPCC, can Southeast Asia step up more as the US has withdrawn?
Well, maybe it's a good time for me to maybe share a really positive thing that's happening in the policy world, and that is, I think about a couple of weeks ago, we heard that Singapore MES and China PBOC are collaborating on assessing how their transition taxonomies can harmonize better. Now, they've already done that on the green taxonomy. Now it's that sticky, tricky taxonomy bit that, just can be fungible. So, and I think that in a world, like you said, in a world where standards are backsliding or, taking a back seat, I think that's something really positive, to see that Singapore and China are actually, trying to make really good progress on this. And that shows leadership in a way.
Quite, that's a positive note probably to end on. I guess, we approach this session, do we need a new climate North Star? The view of our speakers is, no, I guess we need to do a better job of aiming for the one we've got. There's a lot more that can be done to try and achieve the target that is already in place. Look, if you can join me in thanking our speakers, Christina Ang, Winston Chow, thanks very much.
Please welcome to the stage Fadl Mohammed, CEO of Bursa Malaysia Berhad, for a conversation with Bloomberg's Avril Hong.
Okay. So, the global backdrop, I think, is that US policy has had a clear impact on climate-related investment decisions. We've been seeing investors maybe looking for opportunities beyond the US. Amid all this, countries recognize that the climate threat is an existential one. And Malaysia has stayed the course. It has an ambitious green goal of net zero by 2050. And doubling the renewable energy, more than double, to 70% of the mix by then. Amid all this, Bursa Malaysia has been tasked with facilitating this national energy transition and also balancing the regulatory aspects along with the needs of investors at the same time. So let's discuss. Fadil, great to have you up on stage.
Thank you, Avril, for having me here. Thank you.
Let's start with the global temperature, excuse the pun, towards the climate agenda that's cooled a little bit. What do you see as Bursa Malaysia's role in facilitating the energy transition?
I think very clearly for us, we want to see our companies look at sustainability from an impact and competitiveness perspective. And I think for us, all our companies have ESG rating. We use the FTSE methodology. Very clearly, we want them to have very clear baselines. And I think for Bursa Malaysia, the focal point is a couple of folds. Number one is reporting. So we want to ensure that we align to global standards, which we have. We will see companies coming out, the larger ones coming out in 2025, aligning to ISSB standards. The smaller companies a bit later. We will be phasing that out quite clearly. Number two, from a capacity building perspective, it's important for us to enable, this is an approach that needs to be cascaded across an organization. So firstly, we have the mandatory accreditation program, which is actually for directors. So tone from the top is very key in order for us to get this across. Number two, we've got a sustainability accelerator program, which is to help companies to understand in terms of alignment to some of the global standards that are being put forward. And thirdly, we also look at we have workshops, PLC transformation programs for sharings and for companies to be able to show best practices, etc., amongst each other. And lastly, of course, decarbonization. We have Bursa Carbon Exchange to be able to trade carbon credits and also, of course, to help sustainable projects being developed.
As you mentioned, disclosures are a key part of that. Can you share some of the numbers with us when it comes to public listed companies as well as the large non-listed ones? How has it progressed so far?
So for us, from a disclosure perspective, as I mentioned, we will clearly be phasing it out. We will be looking at about 130 companies on the first phase to align itself quite clearly to the ISSB standard under the National Sustainability Reporting Framework. And for 2025, the adoption will come through, but with assurances coming in 2027. And for the smaller companies and the rest of the companies into 2027 onwards.
So for the larger firms, can you talk to us about the percentage towards that goal? How much is currently on board already?
So I think quite clearly a lot of the larger companies, they are already aligned. A lot of companies are, very, very, very comfortably to say in terms of the larger companies are 70-80% aligned to some of the global standards already.
Okay. The smaller ones,
yes.
How on board are they? I mean, they face other challenges, including cost outlays.
Yeah, so mid-markets, and I would call them the SMEs and the mid-markets, I think they will need a lot more support. Quite clearly, they won't have, in terms of the capabilities, the ability to look at target setting, data collection, third-party assurances. So I think those are going to be some of the challenges that some of the mid-markets are going to have. But for Bursa Malaysia, we've always been supportive, and in terms of companies that are listed, we cover all segments. So quite clearly, we have a large pool of companies which are listed on our ACE markets, for example, and these are mid-market companies, and by virtue of them being listed on Bursa Malaysia, they are already on the sustainability journey. So all those bits that I mentioned to you in terms of getting them to have reporting alignments to global standards. So that will start for them also once they're listed. They will also have the ability to be part of all the capacity building, which will come through that Bursa will be able to support.
But what else do you think can be done to support the smaller companies?
I think a lot of engagements will be required, quite clearly, which is why under one of our programs, we have the PLC transformation program, where we do a lot of workshops, sharing engagement, the larger companies, the bigger companies. And I think there's a lot of networks that can be tapped upon to ensure that a lot of sharing in terms of how things are being done better. And I think the end objective about all this is two things. Number one, to help the mid-markets to capture pools of capital, green financing, sustainability type financing, and to grow, and secondly, to help them to be able to access global supply chains. That's key.
What about capital being allocated for the energy transition? I mean, we saw last year, I think in terms of Sukuk issuance, it was 12 billion ringgit. That was a 9-fold increase. How far are you to sort of achieving that goal?
I think the thing about, for Malaysia, very clearly, we've set out a national energy transition policy. And I think if we look at the data and the numbers required, it's about 200 to 220 billion ringgit required by 2030. And I think the bit here is that a lot of these projects are going to be long gestation type projects. They're not going to be, 5-year type financing. It's going to be 15-year type financing. And I think you will need to use capital markets to help that. And we are very fortunate. We have a pretty deep Sukuk bond market to be able to support that. And at the back of that, we've got a lot of investors who continue to look at sustainable assets as part of their mandate. And as you will know, some of our government-linked entities, government-linked investment corporations, the GLICs, such as PNB, have put out commitment out there that they will be deploying up to 10 billion ringgit by 2030 into green assets and sustainable assets.
Some say that for Malaysia to achieve its climate commitments, it needs to accelerate the development of its carbon exchange. Since taking over in March,
yes.
What has been your assessment of the progress that's been made in the past few years?
I think for us, we established the carbon exchange at the end of 2022. We did the first trade in 2023. This clearly is a new economic growth area for Malaysia. And I think it's about how do we actually, credits are to help reduce emission levels and at the same time help companies to be able to support projects, sustainable type projects. And I think for us, since I've joined, quite clearly we see the carbon exchange and the carbon markets developing going forward. We are seeing Malaysia is at the cusp of in the development of its regulatory framework. We will be seeing the introduction of a Climate Change Act and a carbon market policy. And I think that will actually help us to see the introduction of ETS, which is the emissions trading scheme, and also carbon tax for certain sectors. So this will quickly start the development of potentially carbon credits to be traded. And I think, even within, from a regional perspective, there's a lot of collaboration being undertaken to set out a common carbon framework, which is to be able to apply interoperability of carbon credits across the markets.
Is that going to be enough to perhaps allay some concerns about the quality of the carbon credits?
Well, I think that's going to come out at the end of the day. There will be harmonization, standards, and I think that'll naturally come as the markets develop.
What else do you think maybe can be done to further address maybe some concerns about transparency or accessibility?
In terms of?
When it comes to the quality of carbon credits?
I think one key bit is, of course, is capacity building in this space. And I think we need to be able to go out there to be able to engage with investors, market participants, and to build out this market quite quickly, because I think the understanding and depth of carbon credits and carbon markets, that's certainly an area of focus that will need to be...
That we're working towards.
Absolutely.
Talk to us about the broader markets. I mean, we've seen the KLCI last year was among the star performers in Southeast Asia, and this year it's among the bottom performers globally. And there are concerns from investors about the impact from tariffs, growing concerns also about political instability in Malaysia. What do you see as the impact on the local market?
I think it's tariffs inevitably will change the way companies do business. And I think it will reshape in terms of global supply chains. That's inevitable. But I think it will open up new opportunities for partnerships, for collaborations, and I think that will create a lot more innovation for companies. So for Bursa, I think we remain optimistic. We are optimistic. Quite clearly, Malaysia's economic fundamentals are intact. We see GDP growth 4 to 4.8% for 2025. KLCI is trading at a 17% discount to its 10-year average. We are also seeing very strong liquidity because a lot of the funds are sitting on cash. And I would see that sitting on cash...
waiting to be unlocked.
Exactly, and sitting on cash at the highest amount since January 2024. So we will be seeing a lot of those liquidity coming back into the market.
When exactly?
Quickly.
When do you think trading
So I would sense that, in my view, for a lot of the asset managers to be able to capture the cycle, I think when valuations are low is when you come in, and of course to be able to capture the cycles when markets are on the upside, and I think Bank Negara also recently reduced interest rates by 25 basis points. And I think quite clearly we will see a lot more liquidity coming into the system. So yes, I'm super optimistic about Malaysia's second half 2025.
Do you think roughly this is going to be a fourth quarter or a third quarter kind of story?
We'll probably see traction coming through within the fourth quarter onwards.
Okay. Yeah. What about how ripe you think market conditions? When are we going to see that materially changing for big IPOs to take place?
So I think for Malaysia, we've had a good run. So last year we had 55 IPOs. Out of 55, we had 40 companies thereabouts listed on the ACE market. And these are genuine, what I would call mid-market companies looking for equity capital. When you go to a bank, you want to raise capex. Banks are always going to ask you, so what's the equity portion that you're going to put in? So skin in the game is always important for the company. So I think at the end of the day, these are real capital coming through to help mid-markets company grow. And Bursa Malaysia has successfully done that. And we continue to do that. So for last year, we had 55 IPOs. This year, we're targeting 60 IPOs. And we've already crossed our halfway mark. We're at 38 IPOs as of yesterday. So we will continue to see IPOs coming through. Saying that, important for us to also see large IPOs come through. And IPOs, at the end of the day, I used to be an investment banker. It's all about sizing, pricing, and timing. And I think you need to price right to be able to get your investors to come through very quickly to raise capital. And I think for large IPOs, I mean, you will read in the news there's one sizable one potentially coming through towards the end of this year. If that comes through, that will be certainly a great milestone, a great large IPO coming through for Malaysia this year.
How else do you think large companies can be encouraged to list in Malaysia?
So there are a couple of things that we're looking at. So one area for sure is to look at potentially secondary listings. We want to be able to see companies, and we want to have regional companies looking at secondaries potentially coming into Malaysia. So that's one. The other one is, of course, as we drive the conversation early on energy transition, we will see companies within that space looking at capturing the capital markets. And some of these will be the large companies. As they build out, as projects have actually come through, where there are sustainable cash flow generative income, they will be looking at the capital markets to IPO. So that's the second area. The third area, as you know, Malaysia has been actively pushing and driving in terms of the semiconductor space. So there are a lot of players within the semiconductor ecosystem that are also ripe, and we can actually take them out, bring them out into the capital markets to list them. So these are some of the very core areas that we've been pushing.
I just want to round out this conversation. I mean, when you look at the ESG-linked assets, and we've been discussing this off stage as well, what are you seeing in terms of flows into Malaysia, in terms of demand, liquidity?
I think at the end of the day, we see LPs and investors continue to focus and to grow their ESG assets. And that drives through across into mandates to asset managers. And I think if you look at data points up to the end of 2024, last year, we've seen it's quadrupled to 3.2 trillion in terms of assets that are looking for sustainable assets, ESG assets. And ASEAN, we're certainly ripe for it. We're a very, from an ASEAN perspective, we're pretty fossils based. We're pretty, so there'll be a need for us to transition into low carbon type. So there'll be a need to drive for ESG projects to move into more sustainable type projects. And I think companies will need to, look at carbon, clearly to reduce carbon type projects. So there will be a drive towards that. And I think the demand for ESG assets will continue. And I've said earlier that for Malaysia, there's clear commitment coming through from our asset managers.
And that's only increased this year from the last.
And that's continued to increase.
Okay. Fadil, really good to chat with you. Thank you so much for coming on, sharing your plans for Bursa Malaysia with us, especially when it relates to sustainability. Thank you.
Thank you. Thank you very much. Thanks, Ariel.
Fadil and Avril, thank you so much. That brings us to the end of our morning plenary program, but we are certainly not done yet, and we have a lot going on this afternoon. We're about to head into our lunch break, so if you are pre-registered for our Powering Progress Roundtable, that is hosted by presenting sponsor Schneider Electric, that's about to begin, so please make your way to Clover 5. When you're leaving this room, it's going to be over to your right. Everybody else, we have a fantastic buffet lunch just outside this room, so please enjoy. And if you are registered to attend our deep dive sessions, those are going to begin at 1 p.m. over in Clover 6, which is on this side. We'll be back here in the plenary at 2 p.m. We have a lot of wonderful conversations on everything from AI, Capital Land CFO Paul Tam, MUFG's Colin Chen, and you can ask all of your burning questions on COP30 and COP31 to our Bloomberg Green journalists. So we will see you back here then. Thank you.